The stock market just had its best day in over 6 months, but with a 4-day winning streak, can we trust the move? Hello, ladies and gentlemen, and welcome back to the channel where we discuss stocks, commodities, and cryptos together. We expected a short squeeze to come off the most traded zone by Wall Street of the last 18 months, and in similar circumstances, we've found sellers at the top of this descending channel. Will we do so again in light of jobs numbers coming out in less than 24 hours? Also, is this it for the Fed? Everybody's now speculating on the end of interest rate hikes and the beginning of cuts as early as Q1 of next year. With massive trade volumes, Treasuries look set to be one of the most interesting trades of the back end of 2023 and 24. But really, what was interesting about the last couple of sessions in stocks is the huge upward volume thrusts. We saw breadth across the board improve, and today we need to discuss. Well, welcome back everyone to the daily show where we discuss macro lead indicators and hottest charts together. We've got so much coming up in today's show because there is a lot to discuss and some amazing zones. But first up, I want to talk about this. It is a sea of green, and clearly you can tell breadth was up in a big way. And that's going to be very important to swing and investors out there like yourselves. Now let's talk fear and greed. Was it up? Well, no, actually it sat around the same, though upgrades to some of those indicators will be coming over the next couple of sessions. What is more interesting is what has happened to sentiment over the last couple of sessions, especially since the Federal Reserve's meeting. Let's take a look at the Russell 2000, something that most people haven't been focused enough on. We saw the Russell 2000 versus the S&P drop to new lows. That tells us that the smallest companies were incredibly weak in this market, and they could potentially offer the best upside opportunity over the next 12 months if we are actually cycling back into a bullish run. First up, Russell 2000, after seeing a 52-week low to a 4-day gain in under 3 months. Now, you might think, well, how many data points do we have for this? It turns out quite a few. And while it doesn't mean that they change straight away, you can see here we've got a couple of percentage points over the next 2 weeks and 1 month. It's only 61% bullish. By the end of a 12-month period with a similar read such as this, we had 100% of the time markets being up in the Russell 2000. Now, nothing always has to happen again, but it's an interesting statistic all the same. This is where things get really interesting, though. I didn't actually know how many people were bearish out there. Of course, we've been moving into the bullish territory now for over a week, and we've been discussing this idea that the last 4 days, the 2 days of October and the 2 days of November, were going to be more than likely incredibly bullish. And yeah, 50.3% of people just answered a survey earlier this week that they were bearish on the markets, 25.4% neutral, and 24.3% were bullish. I don't know what they were thinking, but anyway, it happened. And of course, it just shows you that sometimes these statistics are good to be used for bullish characteristics. Now, if everyone's so negative on markets, we've gone to a almost new spread of negative 30% on bull-bear spread. Now, we haven't seen this for a while. The last time we kind of got these types of reads was March. And then, of course, the other famous ones were the sell-offs that happened through January. And then before that was October of 2022. So some pretty big bull-bear spreads. It could show us that the markets are actually moving towards even higher highs, and we need to be watching exactly what happens here at this big bear resistance. I also shared the changes on the futures market. So basically we saw CFDs across the board showing retail traders really moving into barely bullish positions over the last 24 hours and getting heavily squeezed from it. The UK, most notable, was most bullish overall. So that's the UK 100 or the FTSE, but I bet you that performed the least in terms of the last couple of sessions. Dow 41, DAX 44, and S&P 51. If you want to see some of these results, I post them over on the Twitter X account, links in the description down below. And I also posted this chart of the last 24 hours for the S&P, so you can check that out over there if you're interested. Okay, let's move into something we've discussed a few times. I just want to talk about tax loss harvesting one more time here, just to show you that institutional clients do this in October, private clients tend to do it in December and November. And why it's important is because there could be opportunities across the board. These are some of the most recent buy ratings from Bank of America on stocks that usually are focused on at the moment for tax loss harvesting. And of course, what that means is that they're all down quite a lot from the start of the year. There could be opportunities in there if they do end up getting some nice turns and the economy starts to improve. Well, not so much the economy, but the market starts to improve thanks to the Federal Reserve potentially pivoting on their interest rates. Now, November to January is usually the run that we've seen statistically tracked over 86 to present. And you can see they've done a little bit better than the main market does in terms of the index. And hey, when you're beating the index, that's not too bad at all. So definitely check it out and see what's happening. Speaking of checking something out, we're doing a great competition. It's totally free to enter. All you need to do, put in your name, put in your email address, and you go in the prize draw, that is. And we're literally drawing this in under 4 days. So if you're interested in entering, links in the description down below. It's so easy to do so. And I hope to meet some of the lucky winners, like maybe even yourself soon, as I'm be doing some private sessions with people to discuss the markets, obviously your systems, and see where improvements may be able to be made. Let's take a look at SPY breadth. Well, we saw this go to basically zero. Well, as close as you can generally go to these zones. When we get underneath 20, we know breadth is terrible. It was, and we also know that this can be used as a counter kind of technique. And we saw this read happen about a week ago. And realistically, you can see here 1 month, 2 months. In general, we get some pretty good statistics over the next year. 89% of the time, markets were bullish for a pretty good return based on those reads. Some other interesting results here. Here's the other one that has happened. So it's the last time we have to look at this slide. It was green, it was green, it was green, and it was green. The odds were in the favor. Last 2 days of October to November turn in similar situations. That was a good mixture of events. And of course, we also had the overall S&P 500 closes in correction territory. 1 week later, we are bullish. Now, I'm going to keep this one on because, of course, 2 weeks and 3 weeks later, statistics go way worse. So if the bears are going to come in, take a look at this. This is the last 15 corrections. Bullish 1 week later. That's where we are right now. Bearish or a little bit bearish around the next couple of weeks into bullish again. So if we're going to see the bears come back through, when would be a time for them to do so? It might be over the next couple of trading sessions. Here are some good statistics of what tends to happen, of course, over the next 2 months based on similar situations. Not too many data points here, but again, some nice stats towards the bulls. Here is the month of the month of November in this case. And you can see here that we get like this kind of switch. So we have a nice run at the start. Well, that's where we are right now. Then we tend to have a pullback and sideways action. And then we have a really good run at the end of the month. Now, it doesn't have to go this way. But again, what's it telling us? If we argue weakness, it generally will happen in that second week. So that's where we're coming up to right now. Just a reminder to always check out those forward PEs, to check out those ratios to make sure that if you're a little bit of a fundamental investor or you like to use some data points as well, you should be looking at it. We did see the S&P 500 dip into under 17 at one point. So remember, 16.8 is the average. It's not that anymore. Unfortunately, it's back up to probably 17.4 or something at the time of this recording, maybe even a bit higher. But yeah, that's what happens with investing. You've sometimes just got to say, okay, this is my zone. I like it. And I like the ratios as well. Uninversion of yields, we'll be watching this one. We'll bring that up more when we need to. And of course, halving of the Bitcoin cycle. Just remember, this is a normal run for this halving cycle. And there still could be more to come. But basically, if we're going to see drop off, it happens after a bit more of a run. We'll talk about Bitcoin targets a little bit later on in today's video. Speaking of Bitcoin, let's go over to gold because, of course, it's the original shiny Bitcoin, in my opinion. And if we have a look here at, well, it's physical asset as well, which is nice. But let's have a look at gold. We're in the squeeze. We're obviously sitting over 2,000. And if we do see rate cuts, I've spoken a few times about how I think that's a fairly decent positive for the oldest currency in the world. So, yeah, similar situations, big runs, multi-months. We're maybe just at the start of it. Let's talk massive transactions now. Did we see Wall Street sell this huge close? Well, firstly, they closed at the high, which probably means there's a little bit more to come in terms of rally. However, Qs did see some large transactions. You could argue that maybe there were some take profit targets coming through on the Qs, which obviously is the NASDAQ. And then we also saw SQQQ, which is the leveraged short version. And that all of a sudden got over here a pretty nice movement in terms of, we started to see a big transaction go through it. So what do you think? I reckon it is a very interesting zone, and this is the area where if the bears are going to come back in, they will. Let's check out the options now and have a look at the options market. It was a big day, 44.5 versus 39 million usual. 46% puts, definitely people starting to dive into the calls, 54% calls. So that's a bit of an increase in the call side. And if we have a look up here, you can see all of the different unusual options activity. Treasury bonds. Now, I've been mentioning this a little bit here, and we've been talking about whether we want to see a little bit more puts come in. And we have been seeing that, but today was a 2-to-1 for the calls. So the calls came out in a big way. Another one that people mentioning, Roku, well, they got it done. This stock has well been known to be one of my most hated stocks in the market, but it did come down to prices that were just very, very cheap. And it did 30% in one day. So there you go. Good earnings, big trades, people obviously looking at that. Some other ones that I think are always notable is that we finally start to see the Russell normalize a little bit. It's just been a put fest. Finally, calls coming back on against those puts. I feel like they're puts stacked all over the Russell and the lows, which makes it, in my opinion, harder for it to get through. We will see some big trades coming through Apple over the next 24 hours as well, as it's currently in its earnings call at the time of this recording. Let's move over to the big movers, and we mentioned that ITB, that is home builder construction, that was a huge deal, and it was +9 for the last 5 days. You know what's interesting? Consumer discretionary. Usually the American consumer is a very important read for the markets. It was up 6.73. Semis up 6 now. Tech up 6. Gamma all over the place in terms of the way that the market's traded so far, with defensives, of course, left behind. And you can see here the last 24 hours, clean energy, regional banks, solar, home builders, REITs. These are all the types of markets that usually get belted if the economy is doing bad, or at least the market is unhappy. So more importantly, the market is unhappy with the Fed. In this case, it looks like they're pretty happy with what they've heard from Jerome Powell, which is basically, hey, we're probably done rate cutting. And rate hiking, and we're probably going to sit here for a bit, then cut next year. At least, I think they might have it right this time in terms of that's what the market is probably correct on. They're saying Q2. I might even be saying Q1 rate cuts, just based on the fact they probably burnt something in the market. We don't really know what it is yet. And then it'll come out soon, and then, it's all the shenanigans. Unfortunately, the system's broken, and we all know this, so that's the way it is. Let's have a look at the SKU. CBOE SKU index was back down into these levels, which it has been for a few days. We want it to start stabilizing now and even towards moving up, and that would be good for the bull side on these markets. Let's move over to percentage of stocks above the 50-day moving average. That's not too bad. A very nice improvement here. We actually saw huge improvements in the above 20. Take a look at this. We're almost above that line again. This is the one that we talked about before. It's really showing a fairly robust move coming into markets, and I think this is very important. In terms of central bank liquidity, we saw some little injections coming back into the markets, again supporting this move at this point and saying, you know what, this could be, well, it's probably the real deal in terms of the way it's moving so far. And then we move over here to yields. So we saw yields actually improve on the small time frames. The US 2-year actually held, so no new low, no confirmation that the highs are in yet. But if we do get this one and we go underneath, I think it's a pretty good sign that we probably have topped off on yields. And that is something I am very focused on. I think we all are, and we are going to be together over the next week. Uninversion of yields. A lot of people ask me the question about this. Did we see it? No, we did not go underneath 1%. So therefore, that has not happened. And check out that upward volume thrust. Oh, wow. I think it was actually 89 point something. In the end, this might be a bit of a wrong read in terms of 90% upward thrust yield, but that's a good day. That's a strong session. And we don't often see these strong sessions, but when we do, take a look at this March, and then, of course, February, and then there's some in October as well. When we tend to see one or two of these happening, it usually marks a sign of a much bigger kind of swing move towards the bull end. Let's take a look at copper. Nice little close, but still not above our alert. I've been really, really bullish on, obviously, iron ore recently, and it's been doing quite well. Copper's starting to look like it's improving. We're watching this weekly incredibly closely together to see whether we can break that downward trend line. And, these are things that we've been watching and waiting for and, checking out recently. Another one is equal weighted market. Now, you'll notice that we're going to have a lot of trend lines that are being hit on the top end or getting close to. So the equal weighted market's coming into this. So again, it's not that I think that everything's all hunky-dory, because it's not. Of course, there are so many problems out there. But we were so heavily bearish. You saw it in that sentiment report. People were so negative on the markets. And fair enough, mass media was absolutely choking us with that stuff. We saw a massive oversell to Wall Street's favorite level on, of course, the main market. We've rallied into this area, and if bears are going to come back in, it's only a few points away until we reach some critical zones we'd look at later on in today's video. Dow Jones Transportation Average, another improvement, getting closer to mean reversion, pretty cool. And home builders putting in a monster day, just like ITB, some big breakouts there. If we actually have a look at construction ETF, you'll notice that absolutely has smashed it. But where did it go back to? Resistances. So I'm going to mark an alert here above those resistances, because I think that's a super bull alert for swing traders. And what we're looking at here is if we get through this zone, we're really kind of saying, okay, well, we're pretty much back in, some type of move towards the upside for the end of the year, which makes sense to the statistics we've been talking about recently. Dollar index has remained incredibly difficult to trade both ways. And why that is because we're at such an important point. Now, if we have seen the Fed most likely sit at this level and therefore cut like next year sometime, that's going to be bad for US dollars, in my opinion, and it's going to push them down. So if you were to ask me what do I think US dollar might do over the next 6 months, I would say it's probably down from here. But yeah, we are looking for signs. So still neutral on that, looking for really what's going to happen next. And then once we get that trigger, remember, it's patience, react, don't predict. My prediction is something, but doesn't mean it's right. It could be completely wrong. And I'm willing to admit that, just like all of us would be in these situations. Let's move over to gold. Daily there, long leg doji. No real rally. I spoke about this in the private community, which we have links in the description below if you're interested. And I talked about this high being taken out, and it just didn't happen. And yeah, it's just a holding pattern at this stage. So, we're looking at gold. We like gold, obviously, on the multi-month, but yeah, that's just an area that we found it. Now, if we go over to gold stocks, they're at an interesting zone. I think gold stocks are undervalued to spot at this stage. So obviously, it's a pretty interesting buy area from the statistical, technical levels. And if we move over to oil, we have not broken above, but I kind of feel like, oil is obviously negative on the charts on the daily and everything. We've been super negative on it. I am looking at alert above here, just below 84. I think that's a pretty key level for oil, and we'll obviously be focused in on that should it happen, and we'll alert you if it does. But for now, the trend is down. Tesla, certainly an improvement. Big day on it, 6.25%. It's down a little bit here after hours at 0.78 down. It's a really tough call. I mean, a lot of people are going to say, oh, it's so easy, man. Look at this. It's rejection wicked. It's probably going to close a big bullish hammer, and it's done it against two of my squiggly green lines and a key level. I agree. I think this zone is absolutely critical if it holds like this, and it could be really good for a swing trader or an investor, even in Tesla, if they feel very confident about it. From a TA perspective, I want to see it do a little bit more, and then I wouldn't mind seeing it pull back. So maybe we'll set an alert here just above these highs, see whether we can get that hit, and then we'll find out whether the technicals are going to actually sell the market. Because if they do at that point and we get something like this, I might start to turn a little bit more bullish on Tesla, especially at these levels. Now, we have seen Apple's fourth quarter results. I feel like they were a slight miss overall. No, I haven't seen the earnings call yet at the time of this recording, as I'm doing it quite early at the end of the session. But yeah, realistically, it was a pretty interesting report, I guess, from what I've seen so far. Usually the earnings call is key. You'll notice that there is this trend line, though, that is so big and so key. We've had the low one, we've had the high one. Remember, I said today is all about trend lines. I don't even usually put them on the charts. We don't even usually do that together, but we have been at the moment because they're all key levels. So yeah, Apple's showing a sign that it could maybe come to fill gaps below, those types of things. Let's look at some major indices. Firstly, I want to talk about Russell. Well, Russell has done a great job of getting back to mean reversion, actually putting a close above the 20 moving average, which has been once, kind of twice, 3 times, 4 times, stopped. So this is a big move here from the Russell. Look at the weekly putting in a massive engulf as well if it closes this way. Now, we've got jobs numbers, but this is a good sign from the weakest of the major market indices. Now we move over to the Aussie 200. Of course, I'm bullish on this after breaking through that 6,900. So it just keeps going at this stage. I still think there'll be a pullback though very soon thanks to the S&P. And then we move over to the German market. Now this one was pretty heavily shorted in comparison to some of the others. And no wonder it had a great session on it, 1.55% up. Really good session on this. We're coming back now to a resistance though, the 50 moving average here, the blue line you can see has respected once, twice, three times, still technically in a swing trend down. So we're getting so close to these resistances. And I think everyone's now going, oh, bull, 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 bull. Fair enough, I get it. But at the same time, we're hitting some of these key levels. The Qs are in the middle of nowhere land in some ways though. So we'll look at the futures, but that's a big rebound. I mean, percentage-wise from the low to the move here is already 6%. We're probably about 6% or something away from the tops now. And if you have a look here, we broke through some of these key levels. So 14,800, an alert that we had set 850. We've gotten through that, but it's quite a large run up and I could see it go a little bit more, but I would like to see a pullback soon to allow maybe the bigger funds to get their liquidity in the way they usually do it. Here's the S&P 500, most traded zone. Obviously nice gap here in terms of the way it thrust back up. We have the downward trend. So again, downward trend lines pretty much going across the board. And I think we're all aware that if we get into these levels, there could be some fireworks happening. Here are some of the key zones that I've got. I've kind of got this little one above, just above the short here that could come through. And I think anywhere between 43, pretty much 20 where it is right now, to 43.80 could have market structure for bears. And because we have the non-farm payrolls coming out, this is going to be one of those zones where if we do see like an initial rally into like a dump, it's more than likely actually going to be a buy as it dumps back down. I don't know whether we're going back down to the bottom end side based on home builders, based on some of these other Dow Jones transportation average and everything else. But yeah, that would be probably the preference. The other one is just a fall straight away and then rally later. I'm kind of feeling those two based on stats, based on everything we've seen here on the charts. But if bears are going to come back in, the zone is very, very close. And as we go 2 hours, if we have a look at the previous session, remember we talk about having patience and reacting. This was a zone, no doubt. I liked it in here to potentially see shorters come back through. They just didn't come. It just went doot, 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 doot. So if you were trying to short, look for price action based triggers. It's something that I put into our day trading masterclass over at fxevolution.com if you're interested. But this is so important. You've got to be setting up those replicable trades on the smaller time frames because otherwise you're just going to get hit really, really hard. Now, we said we'd speak about Bitcoin. It's a really tough one at the moment because, of course, it's in uncharted territory. If you had to say what is your zone that you like, I mean, 40K is obvious. And then, of course, 47,000 is pretty key as well. These are both big levels. There are no really big stop zones in terms of anything stopping Bitcoin in between. You can see when it fell off pretty hard. So we're not even back to the supplies of just underneath 40K. So it keeps making a series of higher highs and higher lows. And you can see that that's still intact at the time of this recording. Of course, if that changes, we'll update you. But at this point, it is still bullish on the main charts. Let's move over now to what's coming out, and we know it's all about non-farm payrolls. Do we see a weakness in jobs numbers? Do we see unemployment rise? All these things will be answered. 8:30 New York time. Make sure to be alert for that. It's usually one of those weird results. There will also be all these revisions to previous non-farm payrolls. I mean, I still don't know why we bother with this figure anymore, considering it gets revised every month. But they'll be worthwhile checking a look at. And of course, we'll put out our special weekend division of that once we see it. So make sure to subscribe and hit that alert if you're interested. As always, guys, thank you so much for watching. Subscribe, and if you want to enter into the competition, all you need to do, links in the description down below, name, email, and you'll go in the prize draw. We're doing it in less than 4 days. I always say you got to be in it to win it. Why not give it a shot? It gives you like 10 seconds and you'll be done. All right, bye for now.